following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, the first chart that we're going to talk about today comes from a request from one of our folks from the UK. That is the chart of Deutsche Bank. As you can see here, it had a big butterfly pattern on the bottom, and it has had a pretty good rally here off the bottom here. We went from 14 up to 1681 yesterday, which is a 61% retracement. But this is still a very, very negative chart, folks. As you can see, once we went below 22, the chart began to look like Lehman Brothers did. And I still think this chart is still going lower. I know we're going to have a lot of rock and rolling with the British exit thing, and it's looking more and more like it's pretty much a done deal that it's going to be in the favor of staying. Even my friends that are involved in it are beginning to tell me that that's what they're looking at also. But anyway, that's Deutsche Bank. So we'll wait and follow that a little bit longer. But that's what that stocks look like. It looks like a lot worse, down the road than actually where it is right now. We also had a request from somebody in Australia, believe it or not. There are people down under that listen to us down there, and this is on the price of copper. And as you can see here, we are completing an ABCD pattern in the copper market over the past 3 weeks. It has some really good price and time symmetry. It also has a butterfly pattern between the 15th and the 21st, culminating today. Now, I believe we went up and we matched the high of early June so far. So I don't know if it's taken it out or not, but we'll be able to see. Okay, someone asked me a question. Larry, when Lehman Brothers collapsed, if you were holding stock, yes, you did. You lost everything. Lehman Brothers went to zero. If you were in Bear Stearns, I believe Bear Stearns got out at $2 a share. You know, I might be wrong about Lehman Brothers too. I think they might have, no, they went bankrupt. That was the largest single bankruptcy in United States history. Bear Stearns went from 160 to $2 a share, but we'll see. I think they were. Wait, someone's saying it's. Someone said they were for sale for 25 cents to cover short positions, and that was probably just to make sure they got the money out of it. Someone asked, would I be buying bonds here at the 167 level? Folks, you are reading my mind here. What's going on here? This doesn't make sense. Hold on. Give me a second here to pull this up. Folks, I had a flight from hell yesterday. I left Philadelphia at 6 o'clock at night. I had a 1 hour and a half delay in Philadelphia leaving. Then when I got to Phoenix at 12:30, I'd missed the flight. And so there were no more flights coming down. So I had to hire a driver to bring me home. And the meatball, I fell asleep in the car, and he took me in the wrong direction about an hour and a half. I said Tucson, and for some reason he headed towards Sedona. I finally get home about 2 hours ago, and it was a rather rough flight. But anyway, made it home safely. Let's get on to the markets. You don't need to hear my ifs, ands, and buts. They don't happen too much here. Okay. This is the Treasury bond. Someone just asked about the 167 level. As you can see, we made a double top with that shooting star candle the other day when we had the big ABCD. We've already looked at the monthlies. But if you'll notice these little red boxes in here that I always, focus on when I'm looking at these things, we're looking at equal moves down, and that's exactly what we're having now at this 167 level in Treasury bonds. This is a very bullish market if you follow any anything, higher bottoms, higher tops, moving averages, just about anything in the world would tell you this is a real bullish market. And if it's a bullish market, it should be a buying opportunity. And so we should get a bounce here from the 167 level. Longer term, this looks like skull and crossbones to me, but that's neither here nor there. But there is a great deal of support, I believe, at the 67 level in the Treasury bonds. That's what it looks like from here in the desert, where it's about 101 already this morning. It's going to be about 109. Yeah, it was an Uber driver. First time I've used Uber ever, and also the last time. But he made amends for it. I mean, I still paid him, but I didn't pay him for going out of the thing. We'll see. We'll figure out how to do this. Anyway, the main thing that I wanted to talk about now, there's a market that we follow a lot that is ready, boys and girls. We talked about this yesterday. This was the gold market. We were looking at it. You'll see that we had that 3 drive to a top pattern. We've now pulled down to right at the 50% retracement level of this move, down around the 2062 level. And if we go to a little bit closer time frame on this, I think we're going to be able to see that we should be looking at something very interesting in gold here, because we have completed a perfect ABCD pattern in the gold market at this 1262 level. Now, that doesn't mean it's going to stop here, but this is a perfect ABCD pattern from the high on June 15th. So we're down 6 days from the high. We're also at a 46% retracement, pretty close to the 50% retracement of the low from May 29th. So we want to watch that very closely. And since we're looking at gold, we need to look at the companion market for gold, which is the silver market. And that's also going to show us that we are really close to something very, very positive. The only problem is it took me a second to find the silver, but now we have it. And I am running on pure caffeine, and I don't drink coffee very much. You'll notice here we had that beautiful Gartley pattern. You can see it, the butterfly pattern down on June the 1st. We've now made a perfect 38% retracement of that June low today at the 1710 level. So this is a strong possibility here that we have a potential for silver and gold to rally today. So pay attention to that. Anything below 1260 in the gold, or anything below 1705 in the silver, both of those would tell you that neither one of them are working. But these are patterns that are completing at fib numbers, and that's what we try to focus on here with these pattern recognition things. And that's what we're looking at right now in the gold and silver. I've had another question or two about the grain markets. I'll focus first on corn, because that's our largest growing crop that we have in the country. And we'll take a look at Christmas corn here to start out with. And as you'll notice, when we made that high up here at the 449 level, if you'll go back and look what happened in July of last year, that we were also making a high. We took out that high by just a few cents. I think about 2 cents. You'll see that in that first box in the middle of the page where it says 103. That means we went 0.3% higher than that. Okay, we'll be back and finish this this corn chart after this break. 877-927.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're talking about December corn here. We were talking about the double top that it made up at that 449 level. Will come down 10%. In just a matter of about 4 days. As you can see, this long ranging bar that has also continued on through today. You'll notice that at 403 we're coming at a 61% retracement of the May low. That also happens to be at the 50% retracement of the April low. So two numbers come together at 403, and for those of you who are a fan of Jim Twentyman, if you would connect the high from July of last year to the high we made in April of this year and connected that line, that's a Twentyman line, and you'll never guess where it comes in. 403. So watch 403 carefully in corn. If you want to buy it there, you don't have to risk very much, because if it gets below 399, you'd probably be wrong, and that would be a 4-cent risk. And remember, this thing is jumping around. It's down $2,000 from its high, so it's not for the faint of heart. So make sure that you put a logical stop in there. But if it doesn't stop at 403, the next level is down another $600, and I wouldn't want any part of that. I'd only want to risk a few $100s on this, because you have so much going for you with a 50%, a 61% retracement, and also a Twentyman line all coming together at the same time. So I would certainly want to look at that. The overall state of the markets themselves in grains is not nearly that bad. If we take a look at the chart for November beans, that's new crop beans. As you'll see, the high that was made right near the 1.618 expansion from the high of 2015. It went 3 cents above that level. Now we're in the 6th or 7th day. We're in the 7th day of a sell-off, and we have some pretty good support. The 382 of this last move comes in around near the old high at that $10.60 per bushel, which is down another, 40 cents from this level. So if you had to put a gun to my head today, and in fact, today I'd even be thinking about that because I'm a little spacey, but no, never do that. Anyway, the one I would look at would be the corn. And the reason why I think it's a lot less risk, of course, it has a lot less profit potential, but I try to focus on the risk, more than anything else. And we'll be able to see what else is going on. I will get some rest right after this. I'm going in for a massage and a steam and a shave, and then I'm going to sleep, and so everything's going to be good. Okay, let's talk about the Brexit, because this is where it's happening. We got to see what's going to go on here. What I decided to do is to take a look at the charts on these dailies to see what the euro and the pound, this is where it's probably going to be looking at. If we take a look here at the pound, you'll notice that we've had this really powerful bottom coming off the 786 retracement. We have an ABC structure measuring up here another 400 pips higher. And remember, we moved 300 pips on Sunday night. So tomorrow we could easily do 400 if the vote comes in positive. If for some stretch of the imagination this comes in negative, that's going to be pretty nasty, I would think. But the way that it looks right now, even my friends in the UK are telling me that, yes, it looks like that it's over and that everybody has turned around. Now, that could be just the poll people talking, but that's what we're hearing. But anyway, the 61% retracement of the move from last May comes in at 151.50. And so we are 400 pips away from that as we speak this morning. So I think that is logical. If it doesn't come in, there's probably going to be some support. I would imagine it, down 500 pips at 142. I wouldn't even want to take a position on here, but it's just not worth it. The premiums that they're putting on the options for the pound and the euro they're just ridiculous. I mean, they're just trying to take you to the cleaners without giving you the benefit of leaving your clothes. I mean, it's just they're just ridiculous of what they're looking at. If we take a look here at the euro, which is another one that is going to be impacted quite a bit by everything else, and that's a real interesting one because this has been really bullish here for quite some time. And if you remember yesterday when we were talking, we said there was some really strong support at that 132, 38 to 40 level. We got down to 112.35, and now we're trading above 113. You'll see the different price objectives on the shorter term one. There's comes in at 114.60, which I don't think would mean anything because that's only 100 and some pips from where we are now. But the bigger one would be up about 500 pips. 13, I'd be 500 pips up around that 118, 119 in the euro. It could certainly get there. That wouldn't be this is because we haven't seen something like this before. So when you've got an outlier event, anything could be happening. Because I still think long term, the euro is really not in very good shape. This is the long-term weekly chart on the euro. As you can see, that shows you that 119 level with that ABCD pattern that we just highlighted. And you can see all of these highs that we've had have been lower ever since 2008. And so it's, this market is still extremely bearish. And if we were to get up to that 119 level, that would give another ABC structure down to around the 97 level, which our original objective on this is at 99 or par in the euro. So those are the ones that we're looking at. The $64 question is, how is it going to react to the stock markets? Probably a lot, because it's going to be very emotional, would be my guess. And of course, believe me, when my guesses come true, it's a very rare event. So it's going to be interesting to watch what happens. I believe it'll be all over by the time we are ready for our opening tomorrow. I'm not sure exactly when that vote happens because I've been traveling, and it's not. I'll have to figure out all that stuff a little bit later. But That's the main thing. So we're looking at the silver and the gold for potential buys today. The crude oil yesterday was able to rally up. It made it above the 61% retracement after breaking $1.10 from that level, and it went up to the exact 786, which was the high of the overnight session. We backed off about 50 cents from there, and I still think crude oil is in a downtrend. And unless we get $1 a barrel higher than the high we made last night, this market still looks lower to me on a technical basis without any trouble at all. There just doesn't seem anywhere to go with that except to the downside, because we've got lower tops in here now and really strong indications that it's going to be the same. I'll put this in here because they're looking at August crude now, and this is when we rolled the contract over. You'll see it stopped at that 61% retracement, and it got up to the 150.60 level. So we'll see. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, so someone asked me a question if this was the worst flight that I've ever been on yesterday. Not even close. The worst flight was in charge of Commander James Twentyman. He had a he had a twin engine plane, and this was back in 1981, I believe. And he had just left Drexel because he knew I was leaving in January of 82. So this was November of 81. And we were flying from Los Angeles to Provo, Utah. Jim had taken a job with Commodity Corporation, and we took the plane. And when we got about 200 miles from Provo, we hit some kind of a storm. But I really thought that this was it. I thought that that all the chips were being cashed in. And believe me, this was not the time of my life where I wanted to be thinking about that. When I got off the plane, I mean, I was a mess. I had lost everything that I had inside, if you can get my drift. And when I got off the plane, I just dropped to my knees. I kissed the ground. And to this day, folks, I have never and never will be in a plane that is not served by at least two pilots and that they serve cocktails. I will not get on a plane that doesn't have those two qualifications. So I know some people like that flying stuff, but it's not for this old cowboy for sure. I've posted a chart of a Canadian dollar, U.S. Canadian dollar versus the euro versus the Canadian dollar. This is a very, very interesting buy here today. About an hour ago, we hit the 27.45 level, which was the exact 786. We've since rallied about 30 pips off of that bottom, so there's a potential that this could be a very, very interesting spot here, to look at this Canadian dollar to the long side. Anything below 127.20, I believe, would constitute a failure on that. But that's what we're looking at. Stocks are opening a bit higher as expected, and we've got the Dow up about 30 or 40 or so, and S&P's up a few points, 4 or 5 points. So we'll see what happens. We're just basically in this tight trading range that we've been in for the last 3 or 4 days between 2090 and 2072, and it probably won't do much on either side of it. Well, it'll do whatever it wants to do, but this is mainly people are going to be watching this. It gets so much in the news, folks. It's just like the cannon fodder that they fed us on the Greek stuff. Remember, they used to talk about the pigs, Portugal, India. Was it Portugal? Yeah, it was Portugal, India, Italy, and Greece and Spain. Those were the pigs. Oh, it wasn't India. What am I talking about? It was Portugal, Italy, Greece, and Spain. Those were the pigs. And now these pigs, and they're not pigs, they're countries. I'm sorry for using that anachronism. All right. Anyway, what we're looking at here are 4 countries that now have interest rates that are paying less on their 30-year bonds than we are paying in our. We're paying more on our 30-year Treasury bonds than those folks are. Something's not right with this picture, folks. I know the gray fox is on the tube today, and she's telling everybody that the things looking better, but we still have some things to work through and stuff like that. But why doesn't somebody look at the Fed balance sheet and say, what are you going to do with this? I mean, come on, folks. There's something not right with this. I don't know what it is, but just common sense would tell you that that's what it looks like. I don't know anything more than that. Okay, let's just go over a few of these markets again. I feel pretty strongly that we made a bottom here in this gold and silver today. Also, watch the bonds here at this 167 level. That would take out the lows of yesterday by a little bit. And that's really strong support because you have multiple numbers coming in there, and you also have repetitive swings that we've seen before in the bonds. So gold, silver, bonds. I don't see much to do in the stock market. Yesterday we got down to that 2074 level, I believe, and we didn't get much below that. Yeah, we got the 2074 spot on, another 61% retracement. And now if we were to measure this out on this S&P, that would take us up to matching the old high here at the 2092 level. That's the way it looks. Oh, thank goodness. We've got someone calling in to bail me out. Jay from Boston, how are you?
Hey there. Good morning, Larry. Congratulations, you survived that flight and the ordeal. The ordeal with it.
I'm okay.
Good. Question: the TBT trade that
Yes.
we talk about, the big one.
Yes.
When will we know it's time to pull the trigger on that one?
Oh, well, the time to pull the trigger was the time I pulled the trigger. The problem is I put my stop at basically break even, and they got me on the next day on the I forget, some report or whatever it was. When the bonds hit that 171.12 level, they took out the old high, which surprised me, and that took me out. And what I'm waiting for now is we're seeing a bounce here, I believe, from this 167. I'd like to see a quiet 3-day rally or a really sharp rally up to the 169.24 level in the bonds, and then I will go into it. I don't do well buying strength on these things like we have in the TPT, Jay. So I'm waiting for the first correction, and I will be on that with like a cheap suit. I'm really going to be on that one. I think that's got the potential, to be something, really, really big. In fact, the only guy that's even thinking like me is a guy named Grundelak, and he's a big time player. He's not small potatoes like me, but I just look at patterns. He looks at a lot of other stuff, but that's what I look at. Maybe with this Brexit thing, we'll get a nice pop. I'm going to have an order setting in tomorrow in that probably around 133.80, or excuse me, around 33.80, I believe, in the TPT is where I'll try to enter it, and then put my stop below that low at 32.30.
Yeah, no, that's a triple-weighted leveraged fund.
Oh, yeah.
So that's a dangerous one to hold on. You can't marry that one.
Yeah, that's for sure.
Because, this is as you mentioned, this could be a trade to hold if you do well. If you've got the trend right on a triple leveraged fund like this, you can really ride it to the stars.
Well, on the other side of this, if you'd have done just the opposite back in 2008, one of those SDSs ETFs went from $1,700 a share. It's now trading at $33 a share. So when you hit it big on these, they can pay off pretty good. That's a good part of this business. You can bet a little and make a lot. So that's what we're trying to do here. Yeah.
Do you happen to remember that one that went from 1,700 down to?
Yeah. It was SDP was the symbol for it. I put it in the report that I sent out to the 24/7 subscribers, but you really can't trade it, and the reason for that is it has no volume now. It only trades 300 shares a day, as opposed to 15 to 20,000. Everyone's lost interest in it. You could buy 100 shares and not move very much, and I don't even know if it'll move after everything else moves. But the TPT has a correlation to that of about 100%, so that's why I'm looking at the TPT.
Yeah, boy, yeah. We'll see. This is the good one, if we can catch it.
We'll see.
Yeah.
All right, my friend. Thanks for calling in.
Thank you.
You bet.
Bye now.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
To show the 20-man line on the Dees corn. I posted it into the room, and if you'll take a look at the dark, I guess the color of the line would be fuchsia, you'll see that that's the one that crosses over the highs and comes in at the retracement on the corn at the 61% retracement of one low and 50% retracement off the other low. So that's another one that you want to watch today. There's a lot of possible trading opportunities today. So may the force be with you, and be sure you use stops, because all of these patterns are probabilities, and you have to be able to realize that when you're doing this, you have to be able to take that responsibility yourself of putting the stop in, and you also take the credit for it when you make the money, because the key here is in making money. And if you lose a little, you can make a lot, but if you lose a lot, you ain't going to make anything. So remember, make sure you use stops. That's the thing that will, because if you don't use stops, you're telling the market that you know more than what it does, and that's not a good thing, because men are often wrong, markets are seldom wrong. So always remember that particular thing. With the one other question someone asked was about this fellow that runs the hedge funds, Jeffrey Gundlach. His big play is in the German Bund, and it also has been under some pressure here. You'll notice that it's down again today. I haven't updated the chart as of yet, but it's also down. It's down, quite a bit, and this is a big margin thing. So that's a huge move in the bond, for that particular, trading vehicle. Also, a point was brought up that I'm not really familiar with, and I'm going to have to figure it out, and that is on TBT of whether, if you're in that, whether you have to pay the dividend to the bondholder, because you're basically short bonds. I'm not sure. I don't like ETFs. The only reason I look at the TBT is because it has, it's triple weighted, of course, but it has a acceptable risk with these treasury bonds. Sometimes you have to risk $1,000 or $1,500, and for most people, that's just a little bit too much. And so that's why I do watch the TBT and some of the others, but I don't particularly care for them. I flat out like the plain futures, the best no matter what. Now the corn has gotten down to 705. We were looking at it at 703. Wow. Let's try this again. 405.5 has been the low, and we got down to 403. Wow, Larry, let's try this again using your brain. I'm going to look at the picture here. Corn got to 405 and a half, and we were looking to buy it at around 403. And so it's about 2 cents away. It's rallied a little bit since that time, but I would wait for the price and see what happens. But that's one of the ones that we're paying attention to quite a bit. So let's just see what happens with that and not worry about it. I don't know if your folks are following that Canadian dollar trade, but it just really rallied strongly. It just rallied another 30 pips, which is equivalent to about 6 S&P points in a matter of about 5 or 10 minutes. So that's another one that looks pretty interesting for the day. And what else do we have to look at? Oh, someone's asked about the cattle market. Let's get back on track here. I'm going to do my very best to have a good friend of ours, Rich Anderson from Anderson Capital Management, on the show tomorrow. We need to talk to him about these grain markets, the status of that, and also the cattle market, because as we talked about yesterday, we are looking at cattle down at the 108 level. Now, yesterday, cattle went down and took out the previous day's high from Monday by just a hair's breadth, 1 or 2 ticks, and then reversed by about $1 a pound. So maybe that's going to be it, but I frankly would still prefer to wait to the 108 level because it would give a better indication that the price is met. Because if you buy it in here, the difference between 111 and 108 is well over $1,500, and you certainly don't want to risk $1,500 in a cattle contract. The most you'd want to risk is about $500. That would be the main thing that I would look at by looking at these particular ones. So we still got a tiny bit of strength in the stock market, and tiny is the operative word there. It's doing very, very little. Meanwhile, I just can't believe how quickly this Canadian dollar is moving. Well, color me happy on that one. All right, let's just look at the other currencies that might have an effect, and that is the Japanese yen. It's still holding above this 103 level. We got to 105 and change last night, but frankly, I think the real play is going to be in the euro and also the pound, and then, of course, the cross rate between the euro pound will also be a big one that's going to be interesting to look at. And I haven't done that chart on the euro cross rate, and that is, let me see if I could do that right now as we speak and see if it shows anything of any great interest. There it is right there. Well, that wasn't it. Hold on just a second. There it is right there, and we'll pull it up and we'll see what it looks like. Wow, this is basically a flat-out toss-up, folks. Wow, this is really interesting. It looks like the euro should gain on the pound. Let's just see if that's going to work. And the reason for that is we just completed a major Gartley at a 50% level in the euro versus the pound, so the euro should be the stronger of the two. Now, that doesn't make any sense, does it? But that's what it looks like here. Let's just bring this out and let everybody see it when we come to the break here, because this is a very interesting scenario. I wish I'd have seen that a little bit earlier, but we want to watch this one. Oh boy, very, very closely. This looks in fact, I've got to do something special for that one. Let me get this chart up and we will take a quick look at it so that everybody can see it, and then we will see. Oh, I just got some good news. Yay. Hold on just a second. Oh, here we go. Oh, dear. Let me bear with me here a second here, and we will get this up. There we go. All right, move this up here. Okay, we have a question from someone in the den about the dollar. How can you trade the Canadian dollar without futures? Well, you can do it in the foreign exchange market, Paul. You just take the Canadian dollar versus the U.S. dollar and use that as a cross rate. But you can do the futures very easily at the CME, and that's the best way to trade because you're saving a lot of money. They charge you like $4 for a full round turn commission, whereas with the foreign exchange, they charge you 2 or 3 pips, which at $10 a pip, you're paying $20 to $30. They tell you it's free, but it's not free because they're making the difference on the spread. You know, that's the difference. So it's better to trade the futures. It's really, Russ is telling me that TBT is double weighted. Now, all I got to do now is find out if you have to pay anything with dividends. I've never held them long enough to find out whether that means anything or not. We'll see what's going. But anyway, the best way to trade it is at the CME. If you have any questions, just go to www.cme.com and they'll give you all the information that you want. Okay, we'll take a little break here, then we'll wind this puppy up, and then it's done for the day.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and my beeper is going off on the Swiss franc. Give me 1 second here. I want to see what's happening here for us. Let's forget about that. We got too much going on. Watch the gold today for a potential buy. Watch the bonds for a potential buy. Watch the corn for a potential buy, even though they've already rallied 5 cents off the bottom. And then finally, let me see, we had gold, bonds, Canadian dollars already rallying pretty good. Yeah, those are the 3 or 4 of the best ones that we're looking at here. And always use stops on these positions for sure. That's the main thing, because these are all probability based, and sometimes these things don't work. And by golly, the Swiss franc is spot on at a absolute very, very important number here, within about 15 pips here at the 95, 50, 48 level. That's going to be very interesting what it does here, because it's got a lot of numbers coming together here on that Swiss franc, but that's neither here nor there with the other stuff that we're looking at. Just too many things happening, which there should be, because we are second day after the full moon, and boy, coming in on that plane over the desert last night, the moon was, it looked like a giant saucer out there that was really spectacular. It was really, really amazing how beautiful it was. So anyway, what we want to do is watch these trades that we got going on. There's going to be wild action probably after the close, because evidently the polls end around 5 p.m. our time. That seems pretty late, though. 5 p.m. Oh, that's Eastern time. Yeah, that would be about right, because that's 10 o'clock, yeah, London time. So that would be, we'll start seeing stuff in the middle of the night, and we'll follow along to see what's on. But there'll be great opportunities no matter what, because these patterns repeat, over and over again. So those are the things that we're keeping an eye on today. And from there, we'll see what else we need to cover. That's about it. Okay, let me see. I think that's about it. I'm just stalling till I hear the commercial. Thanks for joining me, folks. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.